The long-term return on investment of farmland is well documented. It's attracting more and more interest due to its uncorrelated returns and strong hedge against things like inflation. But is it possible to add value to a farmland investment outside of just relying on these external forces?
Our business model is around buying this leased land, high quality land but growing low value crops, and converting that over to organic, increasing significantly the number of crops in that rotation.
Craig Wichner is the founder and managing partner of Farmland LP. You might remember him from his first appearance on the show in early 2022. He returns today to talk about the current state of farmland and where they continue to find places to add value as farmland investors.
By bringing organic and regenerative agriculture to it at scale, and us managing this farmland essentially as multi-tenant commercial real estate.
Craig thinks about his investments as sunshine, dirt, and water, and he explains why he's as convicted as ever about his thesis of growing high-value crops on high-quality land.
What we're seeing is that people are willing to spend more for value, and I think there's a lot of value coming down the pike, and I think that'll make a very big difference for the farmers to take advantage of that.
Farmland LP's Craig Wichner on today's Future of Agriculture podcast. Hello, fellow Ag Nerd. Thanks so much for joining me for another episode of the Future of Agriculture. My name is Tim Hamrich, and every week you and I get to hear from the founders, farmers, innovators, and investors, the people shaping the future of the ag industry. And back on the show today is Craig Wichner of Farmland LP. I had been seeing some news about the big moves Craig and his team were making to acquire and continue adding value to more farmland. And I thought, wow, this must be a tough environment just based on the prices of some of the specialty crops. We're going to talk specifically about almonds because he acquired some almond land, but also the jump in interest rates. So kind of buying and operating profitably these farmland investments, I thought must be a challenge in this environment. But what Craig shared with me surprised me quite a bit, and I'm excited to share it with you here today. If you need a little refresher about Craig from his first appearance on episode 298 in February of 2022, here's his background. Craig founded Farmland LP in 2009 with a simple yet powerful idea to combine regenerative agriculture, although I don't think it was called that at the time, with proven real estate management practices from the commercial property sector. Thanks to that approach, Farmland LP has become the largest fund manager focused on organic farmland in the U.S. Craig is responsible for day-to-day management, business strategy, and all investment activity at the firm. Craig's an outspoken advocate for verifiable data-driven standards for sustainable farmland investing, so investors and consumers can look beyond misleading labels and support actually beneficial farming practices. I'm going to drop you into this conversation here where Craig is catching us up a little bit on Farmland LP since we last spoke in 2022.
So today, Farmland LP owns and manages about $300 million worth of farmland. We started 15 years ago, bought our first 154 acres, and basically set up this fund as an investment fund, as a way for people to be able to invest in farmland, high quality farmland, and then we add value to that farmland, and specifically adding value by shifting it from kind of conventional commodity agriculture to organic regenerative agriculture, switching from the low value commodity crops to high value crops. And, we set out a long time ago to demonstrate that it was actually more profitable to convert that land to organic and regenerative agriculture. And we have proven that. So we've really demonstrated at scale. So we have about 18,000 acres today, a little over that. And we've demonstrated that we buy farmland that generates rents of $300 an acre and take it through that 3-year organic conversion process and get rents of $750 an acre. So very nice step up there. And then we can add even more value by converting to some of the higher value crops like organic blueberries and wine grapes and other things like that. And we have on 18,000 acres, some farmers might have that all in corn and soy, so 2 crops. We have over 40 different crops growing on our land. We farm some of those, so we are active farmers for about 1/3 of the acres, and then we lease out about 2/3 of the land as well. all in these regenerative agriculture rotations.
Sure, yeah, and I want to talk about some of that recent expansion you've been doing. But first, and I have some preconceived notions about this, but I want to get your take. With these large tracts of land that you're purchasing, obviously you're buying them from someone who probably had, every desire to add value to their land before they sold it to get the most out of it that they could. And, considering how much land they owned, they probably had the means to do things too. What is it that prevents someone like that from doing this kind of value add themselves? What are the barriers to executing your strategy that others, not to say nobody's doing it, but that so few others are doing?
Yeah, that's a great question. And just to be clear, we certainly have bought large properties, large individual properties like 4,000 acres or 6,000 acre individual properties. But we also just identify a region and then buy core properties and then just expand around that. So it's really about kind of creating those economies of scale within an area, even though they might be individual legal parcels or spread around just a little bit. But the question is a great question. Like, why does, to some extent, Farmland LP exist, and how do we actually add value? And what we found. So we bought a 4,000 acre property, for example, that was owned for 50 years and tenanted property, and it had two tenants on that land, each farming 2,000 acres. But both tenant farmers farmed exactly the same rotation. So the whole property was farmed 2/3 alfalfa, 25% industrial corn, and about 5% tomatoes, but they were processing tomatoes turned into pizza sauce. The landowner didn't have really much incentive to invest in that property, and the tenants didn't have an incentive to invest in that property. We acquired the property. The landowner was basically aging out, and we identified that there was actually a chunk of land that was farming wheat on that land. So we asked the guys, well, why are you farming wheat if this is, good for other crops? I said, well, we don't have the pumping capacity to farm this 300 or 400 acres and the other crops as well. We were like, well, how much would expanding the pumps cost? Oh, about $25,000. So if we went ahead and paid the $25,000, you'd be able to farm all these extra acres and higher value crops. Yeah, absolutely. Great. Easy investment, right? And again, neither the landowner nor the tenant. 40% of farmland in the US is leased. So you run into that kind of situation. Even bigger opportunity and challenge was converting it to organic. Those tenant farmers, and there's lots of stories about tenants converting farmland to organic. It takes 3 years. And then as soon as it's organic, someone else will come in and offer more money for that land on a lease, and the tenant who did all the work gets booted. So our business model is around buying this leased land that's growing high quality land, but growing low value crops, and converting that over to organic, increasing significantly the number of crops in that rotation and growing higher value crops, and giving those farmers and more farmers actually opportunities to farm that land. And that's where we've shown the increase in rent rates. And if we're making $750 an acre, the farmers are making at least that amount of money per acre. We go from 2 tenant farmers. There's now on that 4,000 acre property, 7 farming organizations on that land. Went from 3 crops to 12 crops on that land, including 600 acres of organic blueberries, which we're actually growing and managing, producing organic blueberries with Driscoll's. So that's where there's just a lot of opportunities to kind of add value to those properties. And it really takes that scale and the ability to go through that 3-year organic conversion period and identify the crop rotations, and then working with multiple farmers so that they can each operate at scale for the crops that they want to grow and that they're great at growing.
Mm-hmm. And when you set out to acquire these properties, does it start with a market thesis as far as blueberries? We think organic blueberries have this potential, so we need to go find a place that's well suited for that? Or is it based on, I'm sure it's based on a number of factors, but kind of where does it start?
Yeah, great. So first it starts on identifying the ideal geographies that we're looking at. So there's a very first screen, we talk about sunshine, dirt, and water. So when you're buying farmland, real estate would be location, location, and location. We're looking at sunshine, dirt, and water. Sunshine is great growing climates. Dirt is high quality soils that have the capability of growing high value crops. And then water is very important. It's both the physical access to water as well as legal ownership of that water, essentially buying those water rights. Just foundationally, 15 years ago when we started, actually for 35 years, I've understood climate change. My degree's in biochemistry and molecular biology. Took a class literally on atmospheric chemistry when I was 20 years old, and really just kind of understood how climate change was working, how it had already been impacting for 30 years, and how it was going to continue to go. And when you really look at those models, you really understand that there's going to be certain parts of the world and the US that are going to be harmed by climate change, and some areas that are going to stay the same or benefit from the trends in temperature and moisture. So that's a very first screen that we do in terms of our geographies. Then we're looking at sunshine, dirt, and water. And then once we identify properties and identify the areas, do an acquisition, then we're going field by field, 20 to 40 acres at a time on our 18,000 acres, and identifying what are the ideal crops to grow on this particular field. And if we identify, for example, blueberries on part of that 4,000 acres that I mentioned that used to be in alfalfa and corn, then we say, who are the best farmers for this? And then bring in those farmers at scale. And in the case of blueberries, we had experience with blueberries, but not in that geography. And then we went out and established a partnership with Driscoll's. They validated our market thesis, and now it's a very successful program.
Yep. Now that makes a lot of sense. And with your strategy to add value, it seems like it's very farmland focused, and it would make sense given Farmland LP being the name of the company. But have you all started to kind of move downstream at all to capture more of the value of what you're producing, or is that part of the strategy in any way?
That's a really great question, and we see a lot of institutional investment firms coming in and really wanting to be vertically integrated. So creating their own brands on all that. We see it in the blueberry space too, just to stay on that example. And we are Farmland LP. You're not going to see our label in the supermarket. And we understand that if you're vertically integrated, that means that you grow your own product and you do all the sales, marketing, and distribution. Those businesses are very different. So for blueberries, we have a great kind of 6 to 8 week window on each of our properties where we're producing great blueberries during that time. And the rest of the year, we're just nurturing the plants and taking care of the plants. If you're a sales, marketing, and distribution organization, you have to provide your customers, supermarkets, with year-round high-quality production. The only way you do that is by being an entirely global sourcing organization and sourcing fruit from the southern hemisphere and the northern hemisphere and up and down the coasts as the markets mature. Those are completely, radically different business models. And so invariably, if you're focused on sales, marketing, and distribution, you're going to see greater opportunities. You're going to need to increase your marketing spend or whatever you need to do. And you're going to look at all this farmland that you own that produces for you 8 weeks out of the year. And it's only generating low teens returns. And you're talking about 25% returns in sales, marketing, and distribution. Your CFO or your board members or your shareholders are going to come in and say, why are you holding on to these low teens returns assets when you should be investing all that capital in sales, marketing, and distribution? And so for the other institutional investors that I talk with who are vertically integrated, I say, when you grow up, we'll be here to buy and manage the farmland. And we'll be able to create a great relationship with you. We'll be able to expand your production. We'll grow incredibly high quality stuff and give you access to more land without you having to increase your balance sheet spend on it. And so that's why we know who we are. We love buying farmland. We love managing farmland. We do it with great economies of scale, and we'll let other people do the sales, marketing, and distribution. And it allows us to have really extraordinary partnerships with groups like Driscoll's because they know we don't have another brand. We're not going to compete with them on this. And so it really gives whatever market sector it's in, it really validates for them that they have a great partner with us.
That's great. With acquiring farmland, I could see two cases in my head. One would be There's a lot of markets that have been depressed in recent years, and interest rates are higher than they were a few years ago. And that might mean, more deal flow, more opportunities to buy land. But I also see probably more competition out there. I read about these farmland platforms and, institutional interest in farmland investment. How is that translated for you as far as acquiring property? Is it getting easier or harder, or kind of the same as it's been for the last 15 years?
It's a great time to be buying farmland, actually. And you're spot on in the trends that you're pointing out. The increased interest rates have really squeezed some people, and kind of the increased inflation and the higher interest rates that people are able to earn in the bond market have actually had people kind of keep their cash closer to their vest. And what that results in is actually more properties being on the market, especially people who are leveraged, and actually less buyers out there. So we actually have a very large pipeline, the best pipeline that I've had in 15 years, and they're high quality properties, high quality opportunities. And kind of here's why to some extent. There's $3.8 trillion, actually it's now like $4.3 trillion worth of farmland in the US. Only 2% is institutionally owned, and there's only about 13% debt on the entire farmland sector. And so what that means is that most farmland is unleveraged. So if the credit markets get wacky, you're not going to have a whole bunch of farmers being forced to sell their farmland because they're over leveraged. And that makes it a very stable, very wonderful asset class that's non-correlated with the other markets, both equity and debt markets. But you have a certain percentage of farmland that is leveraged, and that tends to be leveraged 50 to 60%. If you're kind of in for a penny, you're in for a pound on leverage. And those are mostly the institutional investors who have invested in high quality, high value crops. And the ones that didn't prepare or that may be near kind of the end of their life cycle and are now being fully exposed to interest rates that have doubled are often being squeezed now. And they're basically at the point where they have to sell their assets. Either they're reaching the end of the fund life, or they're being squeezed on the equity side, or they simply fail to make their debt payments and the properties get taken back by the bank and then marketed. And so we're seeing a lot of high quality institutional caliber properties that are on the market. And at the same time, those same trends actually keep those other institutional investors kind of on the sidelines. So it just results in a really robust, really wonderful pipeline that's available today. It's a great time to be buying farmland.
Well, for your strategy, the organic part is pretty clear to me. You can look at what the organic standards are, and if you want to be certified organic, you meet them. The regenerative is less clear to me. So when you talk about kind of regenerative conversion, what does that look like for you? Is it, I assume it's practice based, or kind of what are, Farmland LP's standards when it comes to regenerative agriculture?
Great question. And I love that you ask this of people because there's so much greenwashing in the space, and it's so important as well. And so by contrast, the thing that we love about organic agriculture and the organic standard is that it's federal law. It is codified. It has an independent board overseen by the USDA. There's third-party validators, certifiers, certified by the USDA. It is federal law. If you violate those standards, and anyone can look at those standards, you're going to jail. And there are people who go to jail for violating the organic standards. How regenerative as a term really got started is that people weren't happy with organic to some extent for not really focusing on you can do organic agriculture kind of a little bit in a factory way, like lettuce, where you're doing multiple crops of lettuce in a year and you're not really rotating the soil. You're just doing a bunch of inputs on that land. It's not really beneficial in the spirit of organic agriculture. So they started talking about regenerative agriculture as a way of really focusing on healthy soil biology and improving the soil and improving the ecosystem. And unfortunately, they didn't copyright or trademark the term. And now you have people who basically set up literally their own standards organization that you write them a check and they will call you regenerative agriculture. and they're doing the worst agricultural practices on the planet. They're monocropping corn for 5, 10 years, not rotating out to soy, putting the worst chemicals on the land. And they're basically just saying, well, our neighbors are doing that too, so it's regionally appropriate. So when we talk about regenerative agriculture, number one, we say organic, regenerative agriculture, but the regenerative side is really important to us. It actually is the foundation of what we do. It's shifting from chemistry to biology as the kind of underpinning practices for how we're managing the land. So that means crop rotations. It means cover cropping. It means really focusing on the soil biology, the mycorrhiza, for example, in blueberries, which we can talk for an hour about. But by focusing on healthy soil biology and proper crop rotations, cover cropping and all of that, getting the soil biology right, it actually starts with getting the right plant in the right piece of ground over the right period of time. So we talk about diversification in space in any one year, and also diversification across time. So doing crop rotations over time. That's how you get good fundamental regenerative agriculture. Then it becomes very easy for us to get certified organic because we have that foundation of healthy soil biology. A number of months ago, we got 5,000 acres certified organic in 3 hours. So we keep good records, and it becomes very easy like that. The people who are doing very much conventional agriculture, but then calling a single practice regenerative, that's where it becomes kind of greenwashing. If they can get certified organic easily, great. That to me puts them in the right realm. If not, then they've got a lot of explaining to do, and it really becomes caveat emptor. The person who's looking at that or listening to them make those claims really has a lot of questions to ask. Number one would be crop rotations. What kind of crop rotation patterns are you doing? If you're doing corn, soy, you're going to have a challenging case with me to call that regenerative agriculture, no matter what practices you're doing. Those are not natural, sustainable crop rotations in the world.
And when you have kind of investors in your funds say, that sounds great, but like, where do we get the return on investment on that? Where does the ROI come from in terms of, organic I get because I could see the clear organic premium that might exist. But for regenerative, how are we getting a good return on investment like that? And how do we track to make sure like we're making progress?
Great question. Healthy soil biology results in healthier plants, greater plant growth, greater plant yield, and higher quality fruit production or whatever crop is being produced. You can just understand that a healthy plant is going to produce more and better crop on it. And the question is it healthier to grow that crop as one crop? If you grow tomatoes in the same ground for 5 years in a row, that's not going to work well. It's going to fail. You absolutely need to do those crop rotations. If you grow tomatoes in 20% of your ground and you rotate over a 5-year period, you're going to have a great healthy tomato crop. The challenge is, how does one farmer operationally, from an operational efficiency standpoint, grow all those tomatoes? It's easy for them to grow all those tomatoes at one time, harder for them to grow 5 different crops on the ground, one of those in tomatoes, and then rotate that ground. That's where our business comes along, which is we said, hey, how do we get all the benefits of regenerative agriculture, having great crop rotations, and the operational efficiency? And our solution was scale. So you just scale up the operation so that 20% of the land that's in tomatoes, well, that 20% of the land becomes 100 or 200% of what a normal tomato farmer's operation would be. So that's where we have 4,000 acres, 6,000 acres. If we're leasing out 400, 500 acres of land as organic tomatoes, an organic farmer is absolutely happy with that, thrilled with being able to do that kind of scale, especially because they're going to be able to rotate around every year on it. They're not going to have that monocropping issue over a 5-year period. So that's where, by bringing organic and regenerative agriculture to it at scale, and us managing this farmland essentially as multi-tenant commercial real estate. having multiple farmers on that ground, each one specializing in tomatoes or sweet corn or grains or other crops, and us managing that crop rotation, that's where it makes sense. That's where it really creates a lot of value. And that's fundamentally expressed in us increasing rents from $300 an acre to $750 an acre. Those farmers are making more profits on that land. And all of our organic vegetable ground is leased out. The farmers all want more land. We're actually out of land. We launched Fund 3 so that we could buy more farmland so that we could convert it to organic and have more land to lease to our farmers. So that's the ROI that our investors appreciate. And it's really win-win-win for everyone.
Right. Well, you brought it up there. Let's talk about Fund 3. So when did you launch Fund 3 and talk to us about how it's been going so far?
Yeah, we just launched Fund 3 towards the end of last year. And it's a $250 to $500 million fund. We have already raised about a third of that already and actually already deployed all that initial capital, bought a couple properties. And again, we have these hubs that we focus on. So the first property was near our Oregon headquarters in the Willamette Valley. Great property, about 1,100 acres, grows organic blueberries, wine grapes, and hazelnuts. We bought it at a great price. And then there's this opportunity to basically add value to it. About 400 acres of the hazelnuts were old, kind of aged out, not generating any net profit. So we bought it at about an 8% IRR. And with just a little bit more additional capital, we're redeveloping about 400 acres of those old hazelnuts into organic blueberries and wine grapes. And that'll turn into around a 15% IRR on that. I'm talking about investments. This is all subject to the PPM and the data room. And if you have any questions on it, we're glad to ask. But yeah, definitely ask questions if you have any questions on the investment side. But it's a good metric for, in general terms, kind of how we're looking at these properties and the kind of pricing that we're able to buy and the kind of value that we're able to buy. Already existing cash flow from the existing crops that are there, plus the value add that we're able to do on a portion of the acres. And that's called Riverwood. And then the second property that we just closed on last month was actually 3 properties that we purchased from Trinitas. So that's an institutional investment fund that focuses exclusively on one crop, almonds. And the almond market has gone through some oversupply issues. It's actually gone through several years of pressure, both on pricing and people tearing out some of the almonds. And this institutional fund also had over-leveraged. And they weren't able to make their last debt payments. They did a ton of development, weren't able to make their last debt payments. The bank took it over. We identified 3 properties out of over a dozen properties that were right near that existing 4,000 acre property that I told you earlier. And one of them is actually just right across the river from us. The other one's like 5 minutes down the road, and the other one's 20 minutes down the road. But these were their best properties, and we were able to buy that from the bankruptcy process at just under 50 cents on the dollar for them based on the appraised values at the end of last year. So very, very happy with that. These are properties that we would have acquired just for their sunshine, dirt, and water. And that's basically all we paid for, and we got all the improvements, all the almonds for free on it. So they're very happy with that. And the almond market, in our view, is already turning around.
I promise I don't do that many podcasts, but I do happen to do one for the almond industry and one for the blueberry industry. And so we're really kind of speaking my language here today of crops I'm very, very, very interested in. I am curious about your view on water issues, especially in California. It sounds like you make a big priority of only targeting land with really, really good water rights. But curious about how you see that playing out for California agriculture as water becomes, more and more scarce every year, it seems.
I think water issues affect all of the regions. I think that west of the Mississippi, where you have water as being private property rights, it has a very distinct kind of opportunity set around it, kind of threats and opportunity set around it, because you do have strong regulation around water, and you do have changes both in rainfall and in increased consumption. So whatever water resources you have, kind of wherever you are, you have these increased demands on them. And so that means regulation is increasing, and at the same time is kind of threats to supply. So from an analysis standpoint, there's a lot of questions that you have to ask when you're looking at it. But there's some real, in our view, opportunities of buying the senior water rights, for example, in California, which are senior to the state of California, kind of what are called pre-1914 water rights there. And the date is different in other states. But you really have to look for both long-term physical access to the water as well as that legal ownership on the water. And to us, the pricing of the farmland, when you're buying farmland, you're also getting whatever water rights are associated with that land. And for us, there's really great opportunities. There's the pricing for land with great water rights really, in our view, doesn't reflect the value of the water. And we value, when we're buying farmland, we actually value the dirt and the water independently. And often we feel like we're buying the dirt and getting the water for free. Longer term, I think we'll continue to go through periods where there's longer term droughts and longer term wet periods. That's kind of what the dynamic climate is. The weather patterns are projected to be heading. And so what that means, like right now, water rights are undervalued because it rained after a multi-year drought and people seem to have forgotten about it. We think that that'll be cyclical. We also think that eventually you'll get to the standpoint that Australia got to, which is actually creating a water market, where maybe water going to alfalfa isn't as profitable as water going to a city, right? Because 70% of water is used by agriculture. But maybe we do want water going to blueberries and strawberries. Those crops should get more valuable because people not only want water from their tap, but they also want wonderful fruits and food in their refrigerators as well. And we think that the pricing of water over time will adjust to reflect higher values, and that'll be reflected in the crops as well.
Makes a lot of sense. And are you wanting to make sure everything you purchase has both surface water and groundwater, or does that really vary by the area?
It varies by the area. We actually are a little skeptical of groundwater to some extent, depending on the areas. But for example, in California, an underground resource really crosses property lines. And the way that it's been managed up until recently, it's very much of a bugger thy neighbor. You drill the deeper well, and there's a lot of issues there. Some basins have been managed very sustainably. Like in Washington, the underground water we think is managed very, very well. And so we're very happy with underground water. Plus, there's just a lot more of it. Oregon has very good regulation on surface water as well, and reservoirs. So it just depends on the geography. You do have to be experts in each particular individual geography when it comes to water and water rights. But the opportunities are there. I mean, we're buying farmland where for us, the water is free. The only cost is about $12 per acre foot to pump the water around. And that results in the crop rents that we're able to get for the irrigated crops. But a city will spend $1,500 per acre foot of water on there, and that'll provide water for about 2 households for a year. Well, $12 cost plus rent of $300 or $750 an acre, or selling it to a city for $1,500 per acre foot worth of water. That's a good trade. Oh, and by the way, we have 3 acre feet worth of water. It takes 3 acre feet worth of water to grow one crop like corn each year. So each acre has 3 to 4 acre feet worth of water. And so that's the opportunity of selling that potentially to the city once there's a water market. So I don't think cities need to worry about droughts and running dry. I think that there is a lot of water. I think that the opportunity is around creating that water market, that water bank, and creating a better market. That will, though, result in a big adjustment of farmland values once that's formalized.
Right. Yeah, thanks for walking through all that. That's super interesting. That could be the whole podcast right there. But I know we're running
that is hours on that.
Absolutely. I know we're running down to the end of the time here. Is there anything you wanted to either add or emphasize before I let you go?
One thing that we didn't touch on is that I actually think the future of food is actually very bright. What we're seeing is a lot of improvement in the varieties. For example, blueberries as well. So there's really a lot of kind of good practices and good development, good genetics, not genetic engineering, but just good old-fashioned crop genetics that's really resulting in a higher quality product for consumers. Plus, better growing, better sorting, better packaging, better cold chain distribution things. And so I think that people are seeing a higher quality of food. The other thing that they're seeing, though, is like Driscoll's has a super premium label called Sweetest Batch. And they get about an 85% price premium for these blueberries that are bigger, that have higher sugars. They're specific genetic varieties. And so wonderful flavor as well. They go through an extra sort as well. But the consumer, once they try those Sweetest Batch blueberries, they're willing to pay that 85% premium on there. And they're increasing the size of their purchases as well. And I think as I look at what's kind of happening in the future, the opportunity around high quality food that's, to us, organic and tastes better and better quality will result in, and the current ridiculously low price or the amount of our budgets that we actually spend on food. We have the lowest cost of food in the entire world. What we're seeing is that people are willing to spend more for value. And I think there's a lot of value coming down the pike. And I actually think it bodes very well for kind of the high quality production in the future across all kinds of different crops. And I think that'll make a very big difference for the farmers that take advantage of that.
Craig, once every couple of years is probably not enough frequency to have you on the podcast, but I really appreciate you taking the time to do this again. This was awesome.
Always great talking with you. A lot of fun. I really enjoy your podcast overall. You always have great guests and great topics and great conversations. Thanks for having me here.
Well, thank you once again to Craig Wichner of Farmland LP. Of course, if you'd like to learn more about everything Craig and team are doing, you can do so at their website, which I will link to in the show notes of this episode. And if you have ideas for guests or topics or questions or some more history episodes that I still have plans to get back into, I'd love to hear them. Just email me, tim@aggrad.com. Find me on LinkedIn or Twitter. Happy to connect with you there. Thanks so much for your time and your attention. I do not take it lightly. I'll be back next week with another story of ag innovation.